What if I told you that the next global financial crash won't be caused by housing or tech stocks or even crypto, but by the liquid in your glass right now? We've been told that water's a basic human right. We've been told it's a public utility, protected by governments for the common good. But what if that narrative is already dead? While you were distracted by inflation and political circus acts, Wall Street quietly crossed a line that human civilization hasn't dared to cross in 5,000 years. They didn't just buy the land, they bought the rain. Right now, as you watch this, there are algorithms trading millions of gallons of water, just like they trade shares of Apple or Tesla. They are betting on drought. They are gambling on your thirst. And the terrifying reality is, for them to make a profit, you have to run dry. You feel it, don't you? That squeeze at the grocery store. The rising cost of everything. That isn't just supply chain issues. That is the sound of natural resources being financialized. If you think paying $5 for a bottle of water at the airport is bad, wait until you see what happens when a hedge fund decides the price of the tap water in your kitchen. Where are you watching from right now? Drop your city in the comments. I want to see exactly where the front lines of this water war are forming. And if you are ready to hear the unfiltered truth about the financial engine designed to enslave the poor through scarcity, hit that subscribe button. We are about to decode the biggest heist in human history. To understand the terrifying future facing us, we have to look at a suppressed chapter of our past. Let's go back to 18th century England. Before the Industrial Revolution, there was something called the commons. Land, streams, and pastures were open. A peasant couldn't own the forest, but they had the right to graze their cow there or collect firewood. It was a survival safety net. Then came the Enclosure Acts. The wealthy elite realized that if they put fences around the common land and claimed it as private property, they could force the peasants to pay rent to exist on the land they once used for free. They created artificial scarcity to generate perpetual profit. Sound familiar? Fast forward to the 2008 financial crisis. When the housing bubble burst, Michael Burry, the guy from The Big Short, didn't bet on a recovery. He started looking at the one asset that has no substitute. He started looking at water. But he didn't buy buckets of water. He bought almond farms. Why? Because in places like California, water rights are tied to the land. By buying the land, he was effectively privatizing the aquifer beneath it. He wasn't farming almonds, he was banking water. The Enclosure Acts of the 1700s fenced off the grass. The financial enclosure of the 2020s is fencing off the aquifer. Sound familiar? Let's look closer at the Dust Bowl of the 1930s. We are taught it was a natural disaster. In reality, it was an economic disaster caused by hyper-aggressive farming practices, driven by bank loans that demanded higher yields, stripping the topsoil until the land died. The banks demanded profit, the land collapsed, and the poor starved. Today, we see investment firms like BlackRock and Vanguard holding massive stakes in utility companies and agricultural conglomerates. They are demanding efficiency. They are demanding yield. And just like the 1930s, they are draining the reservoirs to balance a quarterly spreadsheet. The mechanism of extraction hasn't changed. It just got a digital interface. Sound familiar? This isn't just history repeating itself. It's history weaponizing itself. We are moving from a world where resources were managed for survival to a world where resources are managed for speculation. The wealthy elite have realized that in a world of climate change, the most valuable asset isn't the one that grows the fastest, it's the one that keeps you alive. They are betting that as the population grows and the planet heats up, the gap between supply and demand will shatter, and they want to be the ones holding the toll booth on the bridge to survival.
You might be thinking, okay, rich people buy land. That's always happened. And you'd be right. But on December 7th, 2020, something happened that fundamentally changed the physics of the global economy. While the world was locked down, paralyzed by a pandemic, the Chicago Mercantile Exchange, also known as the CME Group, the world's largest financial derivatives exchange, launched a new product. For the first time in human history, water officially joined gold, oil, and pork bellies as a commodity traded on Wall Street. They created a mechanism that allows investors to bet on the future price of water in California without ever touching a drop of it. It's called the Nasdaq Veles California Water Index Futures. This essentially means a hedge fund manager in a skyscraper in New York can bet millions of dollars that water will be scarce in California next summer. If a drought hits and farmers are desperate, that hedge fund manager makes a fortune. They have incentivized the financial elite to root for drought. But here is the twist that makes this truly diabolical. It's not just about betting on the price. It's about who enabled this system. It wasn't a rogue banker. It wasn't a shadowy cartel. The entity that pushed this financialization, creating the data models that allowed water to be priced like a stock, claims to be saving the planet. They claim this market efficiency will help farmers. But when you look at the receipts, you realize the architect of this system isn't a person. It's an algorithm, a risk assessment model so cold and calculated it views human thirst merely as excess demand. You won't believe the name of the index that tracks this scarcity, or the specific group of billionaires who quietly poured capital into the infrastructure before the index even launched. The receipt is wilder than you think, and it leads directly to the pension funds of millions of average Americans who are unknowingly betting against their own water supply.
Let's strip away the Wall Street jargon and look at the engine of this machine. We need to understand the primary mechanism, the derivatives market applied to natural capital. First, the illusion of price discovery. Wall Street tells us that trading water futures, specifically the NQH2O, is good because it creates price discovery. They argue that if farmers know the future price of water, they can manage risk. It sounds logical, right? Wrong. Here's the reality of the derivatives market. It is a dog that wags the tail. The paper market, meaning the bets on water, can become hundreds of times larger than the physical market, meaning the actual water. Let's look at gold as an example. The amount of paper gold traded in London and New York is vastly larger than the actual physical gold bars in vaults. This allows massive financial institutions to manipulate the price of gold without ever moving a metal bar. Now apply that to water. If a massive investment fund decides to go long on water futures, betting the price goes up, they drive the price of the financial contract up. Because the physical market looks to the futures market for pricing guidance, the actual price of water for the farmer rises. This creates a feedback loop of engineered inflation.
The farmer, now paying 300% more for water because of speculative trading, has to raise the price of almonds, avocados, or wheat. You pay more at the grocery store, the hedge fund takes the profit. You pay the inflation tax directly into their pockets. Let's look at the statistics that establish the stakes here. $1.1 billion. This isn't small change. The notional value of water rights traded can skyrocket overnight. When the NQH2O launched, the spot price was around $486 per acre-foot. By mid-2022, during severe droughts, it spiked to over $1,100. That is a 126% increase in the cost of a basic survival resource in less than 2 years. 40%, the percentage of the global population that currently lives in water-stressed basins. That is nearly 3 billion people. Wall Street looks at this number and sees 3 billion captive customers. 2025, the year next year when 2/3 of the world's population may face water shortages. Scarcity is the ultimate leverage. While the futures market allows for short-term betting, the long-term play is even more parasitic. It's called real asset accumulation. Investment firms and university endowments like Harvard's have been quietly buying up millions of acres of farmland in the US, Brazil, and Australia. But they aren't buying it to farm, they are buying it for the drilling rights. In the American West, the law often follows first in time, first in right. If you own the land and the senior water rights, you get water before the city next door does. Imagine a scenario where a mega drought hits. The Colorado River dries up. A private equity firm owns the rights to a massive aquifer in Arizona. The nearby town has no water. The firm doesn't sell the water to the town at a fair price. They sell it at the market spot price, which they have helped inflate through the futures market. This is moral hazard on a planetary scale. Then there is the virtual water trade. This is the most invisible part of the mechanism. We aren't just trading water directly, we're trading embedded water. It takes roughly 1,900 gallons of water to produce 1 pound of almonds. California exports roughly 70% of its almonds. When those almonds leave the country, that water leaves the watershed forever. Financial firms invest in export-heavy agriculture because it is essentially a way to export water from a drought-ridden area to a wealthy buyer overseas, bypassing local restrictions. They're draining the domestic tank to sell it abroad, liquidating the nation's natural capital for quarterly dividends. And how do they get you to fund this? Through exchange-traded funds, or ETFs. You might have a 401k or a retirement account. Your broker suggests a water resources ETF because water is the future. You invest. Your money is then used by these funds to buy up water utility companies and privatization infrastructure. You are literally funding the companies that will sell your own water back to you at a premium. It is a perfect closed loop of extraction. This isn't capitalism. Capitalism requires competition. This is rent-seeking. It is the extraction of value without the creation of value. It is holding the tap hostage.
We need to stop living in denial. The system we rely on is built on borrowed time. The financialization of water is the final frontier. Once they have successfully turned water into a speculative asset, there is nothing left to commodify. The air, the sunlight. The danger here is that the modern financial system is faster, more global, and more ruthless than anything in the 1930s or 1700s. Algorithms execute trades in microseconds. A collapse can happen before you even wake up to check the news. When water becomes too expensive for the poor, we don't just get a recession, we get civil unrest. We get the water wars moving from the stock market to the streets. This is the Hydro-Feudalism I warned you about. A class of owners who hold the rights to life and a class of renters who pay to survive. But here is the choice. We can continue to sleepwalk, trusting institutions that profit from our scarcity. Or
We can wake up. We can demand transparency. We can support local control of water systems. We can refuse to play their game. Are we wiser now, or are we walking the same path as the peasants of the 18th century, just wearing better suits? If this video opened your eyes to the war being waged on your wallet and your future, you know what to do. Share this video, not for the algorithm, but because people need to know. Don't let them own the reign. Click here to subscribe for the unfiltered truth about the economy that the mainstream media refuses to touch. I'll see you on the other side of the trade.